Our next guest says China's capital markets may be on the cusp of a big bang as policymakers allow increased access to foreign investors. I'm now joined by Darby from Nomura International's. He's an Asian equity strategist there. All right, Sean, thanks for joining us. Well, take us through this pilot program first of all. How's it going to work, and who's going to be able to invest?
Well, this pilot program follows on from the successful launch of the RMB trade and settlement program that began last year. And this one allows essentially RMB deposits in Hong Kong to be passed through into the interbank bond market in China. And alongside that, they've also initiated a program, or what's called a mini QFII program, to also allow institutions to buy into the A-share market as well. So it's been a dual mechanism that's been announced over the last 48 hours, and I think it highlights the fact that we've got a fairly robust big bang going on in the financial markets here, and also concurrently in China as well.
Why do you use the word big bang? I mean, do you really think that this is the cusp of something big? This is a very small incremental change, isn't it?
Well, that was very much the case when they started the pilot program on the trade settlement last year. They just had four provinces in Hong Kong and Macau, and then it blossomed into 20 provinces. And of course, you've seen a massive change in the RMB deposit base in Hong Kong. And I would assume that we're going to start to get the same effects going into the bond and equity markets in China. We're going to see a significant liberalization there, both for insurance and corporates investing in the A-share market, and also, of course, as I said, with the foreign investors starting to have some ability to access the bond market as well.
Help us with the motivation behind this. What is China hoping to achieve here?
Well, I think there are two things. One is that it wants deeper liquid capital markets itself. And secondly, as I said, you want to broaden the role of the RMB globally. It does still have effective capital controls. Whilst it's nourishing the RMB trade position, it of course has to do some liberalization of the capital markets as well. And I think that's part of the process, this new pilot program.
Now, does this impact on China's ability to manage and micromanage its economy?
No, not really. I think it's really a case in which you do require different parties to be able to price the capital markets, and I think that's really just, as I said, it's a deepening of the capital market structure in China.
All right, Darby from Nomura, thank you very much for joining us.